be a really busy day of trade today with several frontline stocks in the limelight on the earnings front, not to mention today's weekly expiry. But on this program, Stocks to Watch, we're going to be talking about three stocks primarily. And my guest today is Dharmesh Kant, independent market expert. Dharmesh, good morning to you. Let's start with Ashok Leyland first. Now, results announced yesterday, and they were quite bad. Let's say that upfront. They've now posted losses in three of the last four quarters. And let's take a look at the headline numbers. Their revenue down about 88.5% at 650 odd crores. Net loss wider than expected at 388.8 crore. But critically, there's an EBITDA loss that was again wider than expected at 333 odd a crore rupees. One, how do you rate the numbers? And two, would you say that it is now a time to sort of take a back seat when it comes to that pure play commercial vehicle theme, at least for the rest of this financial year?
Yeah, good morning, Alex. See, as far as pure play commercial vehicles are concerned, last year anyways was a slowdown year, and COVID accelerated the slowdown, and the 1 month was a complete washout, and that was reflected in the numbers. Most of the auto players have been struggling on the EBITDA front as well, and it has to be there because the fixed costs which are there, for example, in employee costs aren't going anywhere. My own sense is that at 50 to 50 rupees kind of a stock price where it is hovering around, still it's I mean expensive because as far as commercial vehicles and heavy commercial vehicles are concerned, it's going to take at least a year and a half before things have to normalize. And from that perspective, because not forget the last 3 years, I mean FY19 till FY19, 17, 16, 18 and 19 was a very good year for MSCV segment. So there has to be a natural slowdown out there. So one should be avoiding Ashok Leyland as a trading play. One can get 5-10% here and there since the market is really heated up. But on market also, I think our cooling time is around the corner. So maybe entry at around 35, 37 makes a sense for a long-term investor. But mid to short-term investors should avoid it. Trading plays are always there.
All right, fair enough. That's a call on Ashok Leyland. Pretty straightforward there. But the second stock that we have is an interesting one. We're talking about Tata Power, Dharmesh, and the results came in yesterday. And let's very quickly talk about the headline numbers there. Again, revenue down about 17%, but net profit up about 26% at 206 crore. Interesting numbers there. Margins came in at 26.8%, slightly lower than expected. But I thought, interestingly, Dharmesh, there's also a commentary with regard to corporate restructuring and how that's going to play out. The merger of Coastal Gujarat Power and Tata Power Solar with the company, and that's going to have a lot of benefits in terms of tax going forward, in terms of finance costs. How do you rate the numbers, one, and how would you play Tata Power? Would you say that it's a strong buy for you at this point?
See, Alex, as far as power sector is concerned, again, because of the lockdown, there was, less demand of that. And most of it goes to the railway segment because railway as of now is, almost more than 90% is running on electricity. And since it was not functional, so major consumption was not there. And at the same time, industrial segment and SME segment were also not, running in the month of April. So but that loss was there. From May onwards, things are getting normalizing, but still railway is not fully functional. As far as Tata Power speaking specifically is concerned, the return ratios are too low. Look at ROC or ROE are hardly there, and all these merger benefits can add a couple of percentage point out there. But again, even if it does 8-9% kind of return on capital and the stock, I mean, a couple of 100 basis point or 150 basis point improvement on the margins may lead to an EPS accretion of 10-15%. But then again, it leaves at around 15-16 times kind of a P multiple when it's functional at full capacity and post all the merger benefits coming into play. And power as a segment, if you look at last 5 years, has done nothing. None of the stock prices have given you any multi-bagger kind of a return. And I don't see that happening because going forward, with renewable and everything coming into play and with national grid integration and transmission losses, primarily transmission and distribution losses which was happening is getting minimized. And if you remove that, if you improve the efficiency on that, there will hardly be any upside left. So my best case scenario for Tata Power is at best it can trade at a book value around 70, 72 kind of thing. So a trading play based on all these news flows which are there is still there, and now a lot of laggards have been catching up, so that can be there. But if you ask me for 3 years perspective or 5 years perspective, I won't be buying any power stocks, leave aside Tata Power.
All right, so it's an avoid for Dharmesh on the power sector as a whole. I'm actually quite interested to find out your view on the next stock, which is a completely different sector, which is why we chose it. Tata Steel, off the clutch, Dharmesh, of nifty companies that are coming out today. I thought that this one would be interesting to watch out for. Let's look at the preview numbers. Their expectations of a fall of 34.5% in the revenue, and EBITDA margin coming in at 5.5% versus 14.9%, may report a loss on the consolidated side of 2,276.83 crore. That's basis the consensus estimates on Bloomberg. But let's not go too far ahead here, Dharmesh. Let's talk about the headline numbers. One, what you're expecting, and in terms of commentary and in terms of the key numbers to watch, what is it in Tata Steel that will really convince you that this is a business to bet on for the long term?
See the commentary on the European segment as far as steel business is concerned, because Tata Steel on a standalone basis has been doing well, and so has been the other steel companies. There has been price hikes taken by most of the steel players, around 1,500, 2,000 per ton, and that is likely to be scenario going ahead. So steel companies have been doing fairly well, both domestic and international exposure. But the segment, I mean, geographically, if you look at it, it's the Europe which has been a laggard, where there has not been any major steel consumption happening out there. So, and Tata Steel has been trying to hive off most of the assets which are not yielding better results. So that could be a sum of part kind of a scenario when units which they don't seem feasible, they maybe try to sell it off, and their merger with Hysan Corp. That again would be a key thing to watch out for, how that shapes up or not. So, I mean, there are many things which they have been trying on the European part, and that is what one has to look forward into, because end of the day, if you are looking at the console kind of a number, unless that division delivers, and at the best of the times they did not deliver. So, worst we have seen, the numbers will be, it will be reflected in all by 56, 60 basis point here and there on the EBITDA margin front, maybe 5.5, the consensus estimate, which is going around. It can be 5 or 6.5, but that doesn't change the, bottom line numbers meaningfully for Tata Steel. So demand, we all know, European demand will not be picking up in a great way, but at least if they are, I mean, bottom line neutral, so that would be a great for Tata Steel. And the stock price has already run up hard over the past few months. So immediately speaking, I think post the numbers are declared, there can be some profit taking, and from trading perspective for shorter term view, 15-20% returns are still there on the cards for Tata Steel. But meaningfully on the whole, if I can speak about the steel sector, I would prefer JSW Steel
Hmm.
when compared to Tata Steel as an investment bet.
Fair call. We have just about a few seconds left. I very quickly want to take your view on Bharat Forge. It was the top performer
Yeah.
yesterday. And I thought very interestingly, a few brokerages have come out and said that they're upping their price target. Are you also as bullish as they are?
Yeah. See, Bharat Forge has, multi-dimensional. I mean, there are too many moving parts out there, and all have been, working in favor of that, be it the defense business or the Indian auto ancillary business, and they have a major exposure in the US. And Class 8 trucks has shown a very good sales out there. So I think the US is there. I mean, there may be
Right.
corrections here and there, but corrections are too important too. So bullish on Bharat Forge.
Fair enough. All right. That's the call on Bharat Forge. That was a bonus. Thanks so much for joining us today, Dharmesh. And to you, dear
Thank you so
viewers,
much,
do
Alex.
stay tuned. There's lots more coming up in just a short while.